Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Yay! It is, what day is it? I think it's like Wednesday or something like that today. Wednesday, the 8th of January. Coming into the last couple days of the first 2 weeks of the quarter study. And we've got the big January Leaps options expiry coming up on 17th. If I understand correctly, it's supposed to be a big trade deal with China being signed this next week. And of course, we've got lots of fun and games going on in the Middle East right now. And insults and missiles are being exchanged back and forth. Injected a massive amount of volatility and uncertainty into the market. And if anything, my message of late has been usually when you see commodities move because of geopolitical events and not economic drivers, that's often dangerous and it's often a trap. So be very careful. We're going through the January barometer reporting period right now. My general message to the site people is go slowly. Do not chase. Do not act out of emotion. What are your 3 reasons for justifying taking the trade? And they better be unrelated. And then, of course, always, is what is value? Have you figured out what intrinsic value of the asset is? And are you buying anywhere near there? So, with all that said, lots and lots of caution. Go slowly here. I know I even noticed on the site, I had a bunch of new people to trading, all FOMOing, getting freaked out about Bitcoin last night. And I was just like, just go slowly. What are your reasons? What's your trade location? What's your indicator saying? What kind of structure do you have to work with? Yada, yada, yada. And none of that changes. So just go slowly and don't chase. We put together these little chart decks here for you guys just to sort of illustrate big picture what's going on. And you can see, holy jeez, this is getting crazy. Interesting to see US dollar now catching a further bid here as we came up against the bottom end of the range. I still think we probably ought to sort of settle down in and around this 97.62 area, sitting at 97.28. I don't see any reason why we can't get up there. On the other side of that event, we're probably going to see a bunch of resistance against these highs and this trend line. Maybe dip back down, come back down and test these lows again in earnest, reload zones, all that kind of stuff. And that probably sets us up for the next sort of central bank meetings. With the geopolitical situation, I don't hear anybody talking about economic numbers right now, which gets me a little bit concerned. Risk on, risk off has just been all over the map overnight. And again, like I said, things like gold, does it really make sense to come in and chase the market up top here? And if anything, if you are a gold investor, please learn this, everybody. The absolute best way to judge the sort of future of a commodity is to look at the stocks that are in that commodity sector. And who's better going to know the underlying business than the people that are in that business? So one of our tip-offs that, hey, something doesn't smell right here about gold is we were watching the gold stocks in earnest here recently. And I got to tell you, man, these things have done some serious technical damage here. The biggest gold stock in the world, trying desperately to hold on to its title, but that'll be a debate down the road as to whether it does or not, put in what I would consider an incredibly well-defined bearish technical signal here 2 days ago when it carved out this upside, outside, downside key reversal. Actually, outside, downside key reversal. Anyway, long and short of it, and that happened to be off at just a sick-ass mountain man level, and it was the top of value. Oh my goodness, that's ridiculous. So at the very least, we just simply have to wait for this to calm down and play itself out, come back in, fill in gaps. We could even probably do reload zones off of this range, come back down into market structure, and let's see whether this thing actually is for real or not here. I have been reluctant about actually shorting, but I'll tell you, with that big ass key reversal bar, I'm getting a lot more interested in getting short. Maybe any sort of counter trend rallies, reload zone, RLZs against this small range. I might give this some serious thought. Um, I haven't let go of any of my gold stock that I picked up off of the bottom because they were such cheap prices, but I don't know. I'm humming and hawing about that, but we'll see how that goes. Long and short of it here is, certainly cannot justify even thinking about being a buyer here. Maybe if we're lucky, we get like, W's that come in, inside bars, empires, fractals, something that tells us that the selling has stopped. But until this is resolved, all bets are off. And then, we look at Mr. Old number one. I think he's number two, but he's all pissed off. And, we've got now I remember that empire we talked about a couple days ago. Now we actually have a double top breakdown working here now. And look at this divergence in momentum. I mean, just the nastiest M here in momentum. Nice little RSI fail here. OBV fail here. So again, and I sort of cautioned people about this recently that please, be careful on the long side up top here. I do like this thing coming back and just sort of cleaning itself up in here. Maybe come back against the top end of this channel. And then, like I said, if we get reload zone counter trend rallies and we start seeing failure up top here, I might even short this thing. I don't know whether there's enough of a profit opportunity here, but it is looking very interesting. Excuse me. Also today, through the daily brief, I also pointed out gold seasonalities. And the problem here is the middle of January. Oh boy, this is dangerous. So I'll just quickly show you this. But in our library, we have a whole bunch of cheat sheets. And where is my seasonality cheat sheet? There it is. If we look at gold, you see that gold seasonality, it's getting tough in here. Usually we look for some sort of top in January, and we actually have a pretty weak market right through till the middle of the summer. So I'm not really looking for a hell of a lot of upside out of gold here going forward. My enthusiasm has been tempered immensely. Moving right along, interestingly enough, we're watching the stock market in the January barometer, and I sort of said, kind of recently, I said this to site people, I said this to the public, just give the market some space. Let it breathe through this. It was fascinating last night that all of the futures markets, at one point, the S&P futures on that insane military exchange over there in the Middle East, the futures were actually down here. And then it turns out that it was a non-event. Basically, a big hurry up into nothing. Look at what the overnight action was. Look at that craziness. So be careful here, everybody. This is dangerous, dangerous stuff. And I would recommend, although I don't give you recommendations, but if somebody was coming to me and saying, Brian, what do you think we should do for the next few weeks? I'd just say, let's just cool our jets. If you do have assets that are breaking out and you want to work reload zone bids and get cheap, totally fine by me. Don't chase. With that said, stocks are right back up top, but look at what the disconnect in the oil. Oh my goodness, this is crazy. And we sort of talked about this recently too. I mean, gee whiz, these oil moves have just been ridiculous. And I'm also noticing too that the oil stocks are starting to come off as well. So that leads me to believe that, a lot of this fluff that we saw in the commodity space, this is geopolitics. It has absolutely nothing to do with economics. And then finally, risk on, risk off bonds. I'm still short bonds. I found it fascinating how we rallied up right into this apex here and last night's not so crazy move. rallied into that apex, and then they whacked it back down. And of course, if the stocks are rip-roaring up, and remember our January barometer is saying that get ready, and all of our analysis, Nikkei comparison, planetary cycles, all that says that, yeah, get ready for a very strong stock market this year. Well, if that's the case, then the bonds shouldn't be doing that well. And frankly speaking, I don't really like bonds right now. So seeing that kind of price action actually makes sense to me. So go figure. If anything, this is a great lesson. A lot of new people to trading, you just don't understand. Commodities, by definition, are volatile assets. By definition, they are. Just get used to it. The question is, do you really want to come in and be a buyer on a commodity after it's made a huge move in any one direction? And you have to just simply learn that you're not allowed to chase. It's just simple as that. We talked lots about blockchain stocks yesterday. Great looking stocks. Actually, I have a whole basket of them. I've got probably at least a dozen different crypto stocks that I either have positions in or I'm building positions in. So, never a dull moment here. We had a lot of fun talking about some of these poppers yesterday. Like a stock like Overstock, if you wanted to use Overstock as a proxy in the crypto space, same sort of thing. You can't chase this move. You got to wait for reload zones, wait for the market to come back against key lows, and then take a good look at it. And I'm seeing a lot of names like that in the crypto space right now, and I'm worried that people are going to chase, and you just can't chase. As an example, I bet you nobody at all whatsoever in the public has ever heard of ClearSign Technologies. But, as you've probably seen from when we bang out our doubles and all that kind of fun stuff, people will be talking about this kind of stuff down the road. But, here's just such an excellent analogy of hopefully everybody can see the W's. Hopefully everybody can see this one candle right here engulfed the two previous price bars, what's called an outside upside key reversal. This is the exact opposite to what we saw on a Barrick. And that actually confirms another double bottom in here. So obviously, you should look at this and go, well, what a big surprise. Brian's in there trying to buy some. And, full disclosure, and hats off, the guy's turning into one hell of a stock picker. This was one of Kavarkinator's ideas. So, if anything, and I even saw somebody ask, so anyway, we can get this Kevin guy to have his own room at this TRI site, and he's just going to tell us what to buy and sell? It's like, who cares about that Beamish guy? I want that Kevin guy. But, I mean, if he keeps coming up with ideas like this, I'll subscribe to his newsletter. All right, let's head on over to the corn. And you just heard Kavarkinator there bleep in, so he's listening away to my rants here. I think on balance with the corn, we can make the argument that we had a pretty nice consolidation. Nice W, nice breakout through the W. I even talked to you guys about, you could just place a buy on stop through this level and just ride the wave. I think on balance, you can actually see pretty well. A, B, C, D. Remember we talked about that ridiculous mountain man level trade? Oh my God, you just got to be like ice in your blood to take that trade. But, oh wow, what a trade. You also notice too, we rallied up into areas that could have been na-na-na-na-nas. Market consolidated, market. No, fuck you. We're going higher. And it did it on volume, right? So the buyers overwhelmed the sellers. That's a good sign. A, B, C, D, I think we hit some short-term bullish objectives in there. I think that makes sense. And then also too, and really I don't like to go into lower time frames too much with you guys on these free videos, but you could make an argument that, where's the shorter time frame chart? Here we are. As you can see, we are slightly talking about this morning. There is that A, B, C, D. What was really fascinating about this is you notice that actually we went from 0.618 right to 1.618 of that range. That's ridiculous. And then overnight, hopefully you can see lots of divergences. Price is making higher highs. Momentum is not making higher highs. My overbought, oversold indicator was sitting very comfortably overbought. And fascinating that, in essence, the market set up this sideways pattern right through the New York Open. Everybody waited for Donald Trump to come out and have this great speech about justifying their action in the Middle East, yada, yada, yada. He came out, he had his speech, nobody said it, boo, and Bitcoin price came off. So, there are some people on the site that are hunting shorts, and actually I think there are. In fact, I think Kevin here was cursing before we got the video going. I can't believe I missed this short. I can't believe I missed this short. God damn it, God damn it. Journal. I mean, traders trade. I mean, hopefully you guys see, we have a lot of trades on the books. We're constantly in and out of stuff. So it's just another trade gone by. But, it makes sense. We had a pretty euphoric blow off top there. Hit AB equals CD objectives, went a little bit beyond. We had a quiz. Who's buying this move after the ABCDs on these divs? Clearly, this is the public coming in here. And gee whiz, if you do simple things like 50% rules as a profit objective, you see that paints a nice 2.39 risk reward. So that's a trader's trade. It might work, it might not. It's just a trader's life. If it does, you get paid $2.39. If it doesn't, you lose $1. Well, hopefully you guys have come to see that if you take enough of these, this just simply becomes a statistics model. And ideally, if you can get into that 60-70% of your statistical model hits this 50% rule, and 30-40% of these, they get stopped out. But if you get paid more than 2 to 1, you actually see your account balance go up very handsomely. So that's what I think is going on here in the short term. We had the big blow off top. We had the big breakout. Man, I heard the FOMO just going crazy here. Not only on Twitter, but also even on the site. I had to calm a few people down. And, let's hunt setups. Maybe this bots out. We get 3 higher lows and we can set up a continuation trade. Maybe, and what I'm thinking is we actually have to reload zone. Come right back down against the original breakout in the POC. Fill in the profile here. And really, I like the idea of hunting nice longs against the original breakout right down in here. So that's sort of what I'm thinking right now. Now, the higher time frame trade, it's on. So live by the sword, die by the sword. You don't know what's going to happen. It's a trader's life. Get used to it. If you want to be a trader, this is our life. So, the W came in. You're going to buy the W. You're going to simply risk to new lows. You use 50% rule as a target, 2.33 risk reward. It's trader's life. I actually think, believe it or not, we can work our way all the way up to top of value. I think, and this is just conjecture, it's purely opinion. But notice original market structure tops, 61.8, 78.6, top of value, all up in this area. I actually think that's a perfectly realistic target objective. The question ultimately here is, do we come back down? If we can come back down against this original buy zone, hold these lows and turn back up, that's what they call a Wyckoff check. That's bulls want to see that. And what it simply means is that, in the short term, the market just ran out of gas. It's reloading now, and in essence what we want to see is that there is so much buying interest at this level that when the price comes down into this area, it's one of those na events, and the market sees so much buying interest it turns back up, and away we go. So that's basically what I'm looking for here in the short term. And interesting enough, just on a side, if we take this little fib study and we go here, up to here, and back to here, whoops. Come on, you. You're not going to cooperate, are you? I'll put you over there. And we go to there, and look at that. So there is the original breakout level, all in this area right here. And our reload zone would just be like a nice little dip into there, and then back up. So we'll see how it goes. Just remember, everybody, please, for heaven's sakes, don't chase. Right? It's your hard-earned money. You pick the prices at which you want to pay for whatever assets you're interested in. Don't make the market make that decision for you. So that's kind of what I'm thinking here. I do like, a nice tag of 7,500. It's a big psychological level as well. And I see a lot of the crypto market going through that right now. So like Ethereum, double bottom, there it is. Market's just sitting there. I don't know if this trade's going to work. I do know that W's work about 60-70% of the time. I got to go in and take that trade. And here's another one. It's kind of a fun name, nothing really too exciting, but nonetheless, it should be just yet another example of, here's the end of the year. You can see the W's coming in slowly, and then into the spring, summer, June, July, you want to be thinking about taking profits. I can see the trade setting itself up once again. So this is a trader's life. Nobody's talking about names like this right now, but you should be able to see the W's. You should be able to see we're right at the bottom of trading ranges. And really, it's just a question of, can you build a plan that has you get in and participate in a name like this, take appropriate risks, and then, of course, if the idea does work, you make darn sure that you get paid relative to the risk that you're going to take. I mean, it might be something as simple as, all right, Brian, I will buy this W. Oh, not this shit again. Why does it do this? Oh, you bastard. I'm not quite sure what I'm doing wrong with this thing, but it always does this. Where the hell is it? Where does it end? Oh, Jesus. All right, let's try that again. It might be, I don't know. It's up to you. If you like W's, I like W's. I buy a lot of W's. If I can get these darn tools to work. Anyway, there's your risk window. And, of course, there's your profit, right? Woo, I'm going to get rich. Lambos. Now, why on earth does this do this? Come on. Gee whiz. When are we going to get to the fireworks factory? All right, so once upon a time, back to where we were. All right, so I don't know whether this W is an acceptable amount of risk for you, but nonetheless, there is the W. And if you look, there's 2-to-1 right there. All you're asking for is sometime over the spring, summer, can we come back up and revisit these levels up here? I think that's realistic. You can maybe even just do something as simple as 50% rules. Look at that. I totally eyeballed that, and it's 61.8. What's the odds of that happening? I'd say pretty high. Hell, you can come in here and say, well, the W already confirmed right there. So I'm going to buy there, and I'm going to shoot for your 61.8. Now I'm going to get almost a 4-to-1 risk reward. Well, caveat emptor, whatever you decide. I just want you to see the bigger picture. That actually seasonally, this stuff is actually acting very normally. And it's just really a question of, everybody, I always put this out. There is no wrong way to read this line. But it's a real great commentary on trading and the market. So you could read that as opportunity is nowhere. I don't see any opportunity. I think it's a total waste of time. Or you can look at it as, gee whiz, opportunity is now here. You know how a guy like me would look at this. All right, everyone. Why don't we leave it at that? Hope you enjoyed the offering. Gave you some new ideas to think about. And, of course, have yourselves an awesome rest of your trading day. And, shameless shill. And actually, I was really surprised. We've had a lot of people sign up for the Level 1 program, so way to go, everyone. But we have a new school term starting up in the next couple of weeks. So if you do want to get to work on building that trading plan and understanding how we build and trade setups, then feel free to drop us a line, a question, and we'll be more than happy to try and help out. Okay, everyone, have yourselves a great day. All the best, and bye for now.